This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end of day video for Wednesday, April 1st. The day session just ended. We wanted to get this video out to you early this evening. In our trading service, we do both day trading and swing trading. Our day trading algos are here on the right. Our swing trading algos are on the left. Let me pull this back a little bit because we were absolutely loaded for bear, aggressively short up here at 23.50. We had all kinds of indicators up here, multiple algorithms, multiple time cycles indicating this was going to be a significant high. Now, our algorithm itself got short right in here about 26.08. And you can see yesterday's midday pivot, which comes out between 12:15 and 12:30. That's right there at 26.06. Our daily algo bull bear pivot yesterday was at 26.05. So on our day trading cycles, we got short on our day trading cycles up here at 26.05. We got short on a swing trade at 26.2350. And both of them worked out phenomenally well. Now, I've got to tell you that I was not expecting a 200 handle move down. We expected a very violent reaction if this area broke. If you remember back Thursday evening, the Globex high was right in this same area, 26.34.35. Now, the result of that swing trade, we trade in thirds. So I took off the last piece, pardon me, the last third this morning at 7:17. That was 110 handles on the runner. That's what we call the last piece. Adding that to the first two thirds, you had 207 handles on a swing trade that was entered yesterday. Now let's talk about the day trading setup. So when we came in this morning, I felt this was quite a bit overdone. And let me go to some screenshots I've already prepped for you. So the first trade this morning we took a little bit before the open, and on that trade we got 9.5 handles out on the first third. That was long at 24.71. We moved the stop up to 24.74, got stopped out. So 3 on the last piece where we got stopped out plus the 9.50. So that gave us 12.50 on that. But other than that, which was a trade that we took before the market opened because I felt that it was just quite a bit overdone. But other than that, there were only 2 trades today. One long trade right after the day session open and a short trade this afternoon. Now, this long trade that we took here off the open, you came down here, failed to make a lower low, and you can see where these bars open and close right at the same spot. There's some algorithmic importance, not on just your standard 5-minute chart, but when you're looking at the algorithmic time cycles, when you see bars opening and closing at the same spot, that's important. Why that's important, that's for another longer, more detailed video. But that's what got us long this morning, and that was at 24.76. Now, after the move down from last night, and again, yesterday morning, we were trading up to 26.36. So you would think you'd get more of a move out of it. Here's the problem. Let's take a look at this screenshot here. No, that's the wrong one. I'm sorry. Here we go. The problem is you had the multi-day long cycle, which you can see right here, at 25.11.46. And the reason that these are fully decimalized, that's the way our algos present the output. It's not like the ES where it trades whole number and then 25, 50, 75 and the next whole number. Our algos are fully decimalized. So 25.11.46. But then you also had the trend warning pivot just above it at 25.13. Now, normally day traders, when they get in a trade, you'll trail a stop. Because our algorithms are so precise, we don't have to trail a stop and give back a lot of that trade. I mean, imagine if you're in here and you're trailing a stop. Well, it came all the way back. So when it came up into the roundy up here at 2,500, that's where we took this position off. And you can see right here, the long entry was 24.76 this morning. We got 10.5 handles out of the first third of the position, 17 on the middle, and then I took the trade off at 24.96. So we had 20 for the runner, that's 48 on the trade. Now, why did I choose not to just simply trail a stop? It was because of what we saw right here, what I just mentioned. The multi-day long cycle pivot here, 25.11, and then the trend warning pivot there. You can see it. You can see it better on this screenshot. But we had those fixed horizontal pivots there, and we also had an oscillator that came in right here at the same spot. And anytime our oscillators, which are these wavy lines that move through the chart, anytime our oscillators come in at the same point as a fixed horizontal pivot, that's a big deal algorithmically. And so I wasn't going to trail a stop and have this thing come all the way back. So we took profits into this. Now, we didn't catch the last couple handles, and that's fine. The reality is, if it came up to 13, we were going to short it anyway, and I mentioned that on our live chart to our members. The fact that it didn't even get up to that 13 and absolutely got hammered when it got into 25, 10, or 11, that told me that the machines were front running it. Now, the machines I'm referring to, the institutional algos, they stopped. The institutional algos sold this exactly where our oscillator came in. And I say this in almost every video. And for some folks, it may be hard to believe because we offer this as a consumer trading service for individual folks typically trading at home. But these algorithms we have are the exact same time cycles, the exact same pivots the big institutions have. And I can prove it to you right here. If you and I and everybody that we've ever met in our lives pulled all our money together, we could not get the SPX futures contract to stop on a dime right there when it came up to this white line. But it did. And the only way that does that is if the institutional algos have the same math that I offer to individual traders like you. It's simple as that. They spend millions of dollars developing their systems. We give it to you for a ridiculously low price. You can go to our website, mercurysignals.com. You can see what the subscription rates are. But this is the same math. Every video we show you these same things where it either stops precisely at these horizontal fixed pivots or it stops exactly at these oscillators every time. Now let's take a look at our swing trade chart. Today's trading was governed by our Mercury bands. Mercury bands are long cycle pivots, and what these do is they pick up volume. Notice I don't have volume on here. I don't care. I don't need to have volume on here. Why? Because what these Mercury bands do is they look for high volume areas. You might have heard those referred to as HVNs. And that acronym, some people call it a high volume node, some people call it a high value node. It's the same thing. If we had, for example, volume on this horizontal axis, so you can see where the big spikes in volume come in at particular prices, this is where you would see those big spikes in volume. And I can prove it to you. Let's take this chart here, and we'll zoom this out. So we're talking about these pivots right here. So look at all the volume. And we're talking about these pivots at 24.98. So here's 24.98, 2,500. You came up here to 2,500, and it collapsed. Came up here again and came right through it. So you got all this volume from here, all this volume from here, came down, came up to it again, all the volume from right there, all the volume from when it broke through, all the volume when it came down and bounced there. Then you've got all the volume when it came up to it here and paused, if you look closely. And so it kept coming back. So the amount of volume that is right in those areas is phenomenal. And that's what you see here. I'll pull the swing chart back a little bit. You can see the same thing. Look at all the activity right here at 2,500. Here, 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 right here. And so when you've got these high volume areas, price is magnetized back to them. And essentially what happens is that volume, price keeps returning to those levels until that volume is sufficiently re-auctioned properly. And all that means is there's more inventory that needs to be worked out. That's all it means. Now, so for the second trade, and the reason for that explanation is that's why it died. Now, the other reason, if you've watched our videos, we've got this very unique methodology, which is called time price regression lines. And price gets magnetized to these, and this is the kind of stuff that you see. So that was the reason to get out of town on that long position as it came up here into 2,500. We knew going in the 24.98 was a big deal. And so I got out of this right at, 24.96 is where we took profits on it. So that was 48 on that. Now, the trade in the afternoon was a short entry at 24.74, a little after 2 o'clock. So let's zoom in here and show you that action. You came up here into 24.82. Again, it came right back into the thick of this, and then it collapsed. So you've got this very important tick trend warning pivot, and these are very binary. They'll come down, try and hold them, but when they break, they get very, very binary. You get fast moves. When you came up here and this stopped like that, well, the short trigger is when it came back down through that. So this is 24.75, call it 24.76. As soon as it came back down, where did this next bar stop? Right here. Right there. We got into the short at 24.74. Now, it was moving fast, so by the time I typed this in and got in the trade, I was in at 24.73. Now, we put a tight stop. A four-handle stop in a market that's moving like this is a very, very tight stop. But we knew because of this rejection here and because it came right back up to this pivot that we were going to know right away if we were wrong. So the high of this bar here, this green one, the one right before this rejection candle, the high here is 77. So that allowed us to get in at 73.74 and put a stop one handle above that, because if it traded back up above this candle here, then you were wrong. And one of the cool things about these algos is they allow you to lean against the pivot level with a stop on the other side, so you know very quickly if you're wrong. Now, because we had such a tight stop, that's why I was willing to only take a couple handles out of the first third just to get some risk out of the trade. And then I took the middle very quickly also. So that gives you almost 10 handles right there. Well, you know, you got 10 handles and our stop is only 3, 4, 5 handles above where we got in. Now you got a free trade, and all we did was move the stop down. Now, where did it come down and stop? Mercury band at 24.32.16. Because this was coming down so slowly, and this was pretty orderly, when 24.50 broke, you would typically expect to see a fast move down, but you got this slow, just very orderly move down. So when it broke 40, that's when I took off the trade. Because of the fact that it came down very slow, very orderly, there's a high probability that when it came down into this, it was going to launch. Well, your low was 2 handles above this Mercury band. So I wasn't waiting for that, knowing that you were likely to get this move up here. Was that 24.69? So, I mean, you got a 37.38 handle launch right off of that. You can see it here. So I chose to take profits. And the other reason I took profits is it was going into 345, typically going to get a little short covering into 345. So I got out early, took 33 on the runner. That gives you 43 on the trade, and there's your day. You know, you had this small profit to begin the day, 9.5 handles, and then the one long trade, 48, and the short trade that was entered right after, a little after 2 o'clock, 43. So you got 104 handles on a day when we only took 3 trades. We don't hyper trade. We were very, very careful today, but 104 handles. And you know, the cost of our subscription is a couple handles a week. So we hope that you'll check out our website, mercurysignals.com. Everything that we do is logged and time-stamped. So every time you watch one of these videos and I show you this timeline, these are all entered in real time. So for our traders, our members, you have a live chart. Every day you go to Zoom. You have a free Zoom account with your email address. You go to Zoom, we give you the code for the day, and you see these charts moving in real time. And then we also have a Slack channel. And on the live chart, I'm talking on the mic all day long, talking through the setups, what's developing, what to expect. I mentioned even before we got up here that this was going to be a big level, this 25.13, and it will continue to be a big level if we go back to it. But on the live chart, you can see the charts moving in real time. You've got me talking on the mic. I've been trading for over 35 years now. I do this professionally. But I'm on the mic all day long, walking you through the trades. And then we've got a Slack channel where we've got charts, we've got our pivots, and most importantly, all the trade alerts are logged in real time every single day. And that, my friends, is called full accountability. People that try to sell you trading services that can't show you time-stamped logs of everything they did, don't bother with them. So again, we hope you'll check out our website, mercurysignals.com. We thank you so much for your time. Most importantly, we hope everybody in your life, in your home, in your family, in your social circle is healthy. And most of all, God bless you, God bless your family, and we hope to see you again soon.